Earlier this month, we saw policy rate meetings by heavyweight central banks. Our chief equity strategist and economist, John Blank, is here now to recap the outcome. John, what did these meetings mean to the global economy, especially regarding interest rate policy?
Well, Terry, U.S. Fed, of course, is at the center of the story, and they kept rates on hold, and they're looking for a rate cut maybe June-ish. So they have a meeting in May. So second half of the year for the Fed. But what was interesting this time around from a global perspective is the Swiss National Bank actually cut rates. And down in Latin America, the Mexican Bank of Mexico cut rates, and a lot of other Latin American groups have cut rates. So rate cutting away from the major banks like the Bank of England and the United States has been happening. And interestingly enough, going the other direction, we had negative rates fall off for the first time in 8 years in the Bank of Japan, which was other very notable news in central banking. So I think the story here is there is a disconnect in the timing of rate cuts where, places like Swiss Bank and Latin America are cutting already. Places like Japan are, basically cutting from negative to zero, and the United States is holding.
Yeah, so it's been all over the news. Expectations for the number of rate cuts have been dialed back here by in the United States. What role has recently released U.S. economic data played with that?
Well, we had the 3.4% real GDP growth rate for the fourth quarter, but I think the real issue here is the March 20th dot plots. And those showed us, Terry, the Fed's view on the macroeconomics in 24, 5, and 6. And what they basically said to us is they're going to give us 3 rate cuts of 25 basis points in 24, 3 more 25 basis points cuts in 25, and 3 more in 26. That is, if you do the math, 2.25. 2.25 takes us from 5.3 to 3.1. And that is where they would like to be in 2 years if they can get the inflation rate down to 2%. That would be a 1.1% real rate, basically 1%, and that's what they like. So the question here is, can the economy's growth and the inflation rate allow them to get there? And that is the question they will debate in their meetings for the next 2 years.
And so that is what is prompting the Fed's caution here in cutting rates?
Yeah, of course. You've got, if you think about it, that's 9 rate cuts. They personally forecast, and there's no sign that inflation is abating. They're at, we'll get the PCE core numbers tomorrow. The story there is 2.8 on the broad and core, and that is, significantly higher than they need it to be. And they will not cut down to those levels unless they see it get to 2%. So sticky inflation for the last mile from 3 to 2 may well be the case, and this is by no means a assured event for the Fed, even in their own language.
And tomorrow being March the 29th, because we're talking here on the 28th. So you mentioned June as the target date for the first cut. Is that now a realistic expectation for the Fed to start cutting rates?
Well, Terry, I looked this morning at the Fed fund futures for December. And what you find out is, there's a 35% chance that we actually get 3 rate cuts done, but there's actually 25% chance we get 2 and 25% chance we get 4. So what the market's telling you is it doesn't really know what the Fed's going to do. It's giving a 1/3 chance of the Fed getting it right in December. And so that means June is, the wild card, because the easy way to get to 2 rate cuts is not do June, do a SEP-DC. And very likely to see that. We can see that.
Economic growth is slow in many other major economies up to this point, because you said we're getting fresh data out tomorrow here in the U.S. Have fresh PMIs from around the world shown real GDP growth is picking up?
Yeah, the JP Morgan PMI is stronger, and that is showing growth picking up around the world.
U.S. GDP increased at the end of last year, by the way. What do you see on the horizon for growth here this year?
I see a 0.5 point above 2% long-term trend growth at 2%. So I see 2.5% is a fair estimate for what the U.S. does in 2024.
U.S. Treasury yield curve inversion still very much in the news. Is that still portending a U.S. recession?
Yes, it is, Terry. Yes, it is. And that is counter to the optimism of the current moment. But keep in mind that bond markets are the smart money, and we are not out of the woods yet on the recession call. The question here is if the Fed cuts softly, just a few basis points like we're talking, or whether it gets into a chaotic situation where it cuts hard and fast. The real issue here is, is the market forecasting a soft landing? And that is the yield curve inversion of this time, of this measure, of this vintage, or is it something they cannot avoid a chaotic descent once they started trying for a soft landing? That is the million-dollar question.
Kind of on an aside here, you recently wrote about Alfred Chandler Jr., who was a much esteemed professor of business history at Harvard and Johns Hopkins University. Basically, why is understanding his Chandler's theory important to understanding business overall?
Yeah, Terry, I mean, a lot of times when you ask yourself, why does the United States, knock out the ball out of the park in an economic sense, and the UK and Australia and places like Germany and Switzerland don't? And really the answer is we're just big. We're a 330 million person economy stretched across the continent. And over history, Wall Street, based in New York, has learned from the railroads on through the oil companies and the automakers and into the current moment with the internet companies that we can make mega big companies. And these scale and scope drivers that deliver the profits for these companies lock them in as dominant players. And so my point is, Chandler is the great grandson of the Poor's and Standard & Poor's. And he is the echo of this long history. And so a lot of times people like to think that these big 7 or 8 companies in the United States that are driving all the earnings growth this year are somewhat unique. And the truth is they're completely consistent with our history, Terry.
Very interesting indeed. Wish we had more time to get into that. More strong buy stocks on your radar, though, include the Bank of New York Mellon, 7-in-1 Holdings Company, and Viva Systems.
Yeah, ticker BK, Bank of New York Mellon. Why do we want to point this out? Because back when this rally started, it was $41, $42 a share, and I'm looking at $57 a share 3-4 months later. So the interesting thing with the Bank of New York Mellon is the rally in the stock market has included the big financials like Bank of New York Mellon. So is there any play left here? You still get a 2.95% dividend, and you still have a PE ratio of 11. So the answer is yes, we can get a price target on our fair value in 2025 at 65. So there is another $10 a share for BK. 7-in-1 Holdings, Terry, is will be very interesting if you've been to Japan, because this is 7-Eleven, the convenience store we all know about in the United States. What you need to understand is back in the 80s, a Japanese conglomerate, 7-in-1 Holdings, bought 7-Eleven and made it Japanified. And it is found in if you ever go to Osaka or Tokyo, you're going to find 7-Eleven as one of the dominant brands. And what you're not going to understand is it's not a U.S. company anymore. So this is a Japanese stock, value of a number one buy right now because Japan's getting some acceleration. I would tell you the estimate revisions are really modest, a couple cents on 2024 and 25. But for Japan, if something's happening that's working, you're going to hear about 7-Eleven getting better because the convenience stores there pick up a lot of the lunch and dinner business. The last one is Viva Systems, ticker VEEV. I got a number one buy rank on this, $7 a share next year, $6 this year. What did they do? This is more cloud-based software applications and data solutions for the life sciences industry. So basically, this is a specialized cloud system for life sciences and data. They found this niche and they've been mining it well. And you've got a nice entry point here at 230, and the previous highs are 320, Terry. So if the biotechs get running, you can, which they are lately, Viva Systems is a name you can trade and benefit from that. So ticker VEEV is worth knowing about.
All right, our chief equity strategist and economist, John Blank, with an update on the global economic picture. With John, I'm Terry Ruffalo. And if you want to aim your portfolio for 24% a year and more, Zacks Ultimate gives you 30-day access to all of our buys and sells, and it's only for $1. Get details at Zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.